Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with the CEO of Hemlane, Dana Dunford. How you doing, Dana?
I'm great. Thanks for having me again, Michael.
Wow, you just put out an amazing survey, actually the results of a survey. Do us a favor, kind of set up the survey, because we're actually going to look at the results, and I think it's very much one rental at a time audience. So I want to dive in and look at it, but set it up, talk about your partner, talk about why you did it, and maybe a couple of highlights, and we'll jump in.
Yeah, definitely. So I think if you kind of back up of what we were trying to accomplish from this is really understanding the mass market of landlords out there. Who owns these rental properties? Who's buying them? What types of property management solutions they're using? How they're thinking of the future or with their portfolio. So we sent the survey out to a couple thousand landlords. And then we got responses back, and they weren't people who used Hemlane. They were all just anyone in general who was a landlord who owned rental properties, and sent the survey out to them and got a couple hundred results from it. Okay. And so we basically took those results, and most of them, as you can imagine, own between 1 to 4 rentals. And that's, mass markets, you can assume that is it. However, there were just over 10% who had over 20 plus rental units. So just to keep in mind, there were some who had quite a few. They're more of the Michael Zubers of the world who've built up that portfolio. And then the rest of the folks in the survey were those who are looking to get to 20 plus rentals, or it seems like that, based on how they answered their questions of how they're thinking about real estate in the future.
Very, very cool. Well, let's bring this up. Let me see if I can share the screens and technology. Look at that. I think it's going to work.
Great. There you go. And just really quickly on it, we conducted the survey with Benchmark Research Reports. So they helped put this together and prepare it for us. Okay. So let's go through kind of what some of the results were and key categories there. So the first one I would say is, and this would be slide 4, is looking at what
can you see my screen, just so we're
I can see your screen. Great.
Okay, cool. So I'm going to go to slide 4.
Yeah, and this was essentially going through asking our survey participants what percentage of your investment portfolio is actually real estate. And the reason this is important is to understand how bullish you are on real estate. Is this just a small percentage of how much you own? Are you looking to grow this portfolio? And for majority of them, real estate makes up at least 50% of their investment portfolio. So half of the respondents said it's over 50%. So if you look at your total asset value, and what that signals is actually, if you go down to the next slide, we're asking well, why do you own these rental properties? It's really for that cash flow.
Oh, thank goodness, one rental at a time fans. I was hoping we were not seeing appreciation on this. Yeah. Okay, good.
Yeah. And so it's primarily for that cash flow. And, when I think about these, because I didn't know any of these survey participants, I'm sure maybe 1 or 2 I've come across, but one of the things that's interesting about it is that mentality of this is actually for this cash flow. I'm working a 9-to-5 job. I'm slowly building up this cash flow. So I have, this recurring income every single month. And so, I think the people in the survey are smart. They know why they're investing in real estate. But the best thing to look at with this is the next slide. So we just went over.
I actually have a point on this slide. Yeah. The last one, inflation protection, right? This is really cool, because the very first thing we looked at, slide 18, we were saying most people own less than 4 units. But now we have, I don't know, more than 30% of people looking at real estate being an inflation protection, right? In the United States is beautiful because, again, you can get 30-year fixed rate debt. Rents still go up, inflation still happens. So the fact that mom and pop are thinking about inflation hedge is pretty powerful. So I thought that was cool.
Yeah, definitely. And then this is interesting. So remember that slide 2 slides ago where we spoke about 50% or more than 50% of their investments are in real estate. Sure. You would think that maybe they'd say, oh, I want to diversify out of real estate. most of them actually plan to purchase more rental properties. So over 60%, I mean, that's 70% right there, are considering in the next 3 years to purchase more rental properties. So we're talking here about, oh, what's happening to the market. Everyone's still bullish, I think, because of that inflation hedge, because of fixed rate and knowing you can refinance that even if you come in at a higher rate now.
Yeah.
And those who have real estate are telling the rest of people who have cash out there to invest, hey, I'm most bullish on real estate. 50% of my portfolio's there, and I'm planning to purchase more. Like, I'm basically doubling down on this asset class. So I found that to be super interesting.
Yeah, the one thing that it would be very interesting, it sort of feels like to me, I'm having a deja vu moment today. What do I mean by that? I started my real estate journey right after a stock market crash, right? I got burned. I made a lot of money, lost a lot of money. And I wonder how many people are out there going, gosh, maybe, today is the 27th of October, the day after Meta released tragic earnings. Their stock's down 25% this morning.
Yeah.
I wonder how many Facebook people are just going to sell out and go, hey, I got to try something different. And because that was me, right? It wasn't Facebook. Obviously, it was Cisco Systems back in the day that burned me, and then Enron and WorldCom got me later. But yeah, it'll be interesting to see how many people just come to real estate, because again, fixed rate debt, you can feel it, you can touch it, you get income every month. There's tax advantages, 30-year fixed rate debt. So makes tons of sense to me.
Yeah. And one thing I would say also about that is that with real estate, it's not this get rich quick. You
No.
do have to do the work, but those
Mhm.
who've done the work are saying, yeah, this is the best way to go. So history repeats itself.
I think so.
Yeah. And then this is very similar to the last one, just worded slightly differently, but the majority are allocating an even higher percentage, of their investments to real estate. Then let's go over the management. So that's more on the investment side. So the first part of our survey with benchmark research reports, the first part of it was on just real estate as an asset class and understanding how folks who had real estate, most of them with 1 to 4 rental properties, how they were thinking about it. Then the next questions we went into was the property management. Because as you know, there is quite a bit of upfront work. You're doing your diligence every day. You're looking at properties to see what you're going to purchase. But after you purchase it, then you have 10 to 20 years to basically do the management, the property management. And so we ask questions about how they're thinking about their property management and how they want to be involved. It's interesting because while we know that 72% of landlords self-manage their properties, that's a US Consensus Bureau report. We also, in our survey, found that actually they want as little involvement as possible. They just want to be involved in the key decisions. They don't want to do the administrative stuff. They don't want to be responding to tenants' requests and stuff like that. And then there are some who want to be much more involved, but over 50% here are saying, hey, I really don't want to be involved in the management.
You know what? I want to, so that second one there, I want to be involved in as many details as possible. I would love to talk to, I don't know, whatever that is, 28% or 25% of those folks, because my gut tells me, having been in this game a while, is they have 3 to 5 years of experience, because every landlord I know that's got more than 5 years are like, I'm done. I don't want to deal with this. I want to be out of the day-to-day, because it's just another job and it's not particularly a great job. So it's funny.
Yeah, no, definitely. And then so with that, and you're right, I think there is this kind of flexibility we see with property management where it's not one size fits all, not only for a person, but also a point in time. There are folks, and you've said this, Michael, at the beginning, you wanted to kind of know how to be a landlord. Once you know how to do it, because then you can ask your property manager the right question. You want to kind of remove yourself and say, great, now I'm going to have the oversight on it. And so I think over time, not only you as a person and your personality will dictate what's best in property management, but it's also you will change as a person and what is best as you grow your portfolio and stuff like that. So then this is the amount of time spent on property management. We say it's nominal. I mean, I think it depends on, it depends on whether you think,
Now, is this a week, a month? Oh, this got to be
this
a
is
month.
monthly. Sorry, this is
Yeah.
monthly. Yes.
Yeah.
So this is per month. How long do they spend on their property management? So for owners, I'm going to talk about the 1 to 4 unit because I
Sure.
think that's right where people are starting. And it looks like some say no time. So they probably have a good property manager in place, or they have a property manager in place and maybe not as good, but maybe should have some more oversight.
Maybe.
It usually falls in one of those categories. You either have a good property manager and you spend no time, or you spend no time and you're going to have to spend time in the future. And hopefully you're in that first category where you have a really good property manager. You don't have to spend the time. But out of those respondents with 1 to 4 rental units, it's up to 2 hours. And I assume during the leasing stage, it's going to be more, especially if you're self-managing.
Yeah. Yeah. Yeah, when I look at this, I just go right to Dion, right? Dion Talk, part of the Three Amigos. He's got 16 units of memory serves, and I think he's kind of right around that 4-hour mark,
Okay.
which is
Yep.
kind of right there in the middle. Again, he likes to talk about being a lazy landlord, does everything over his phone. But yeah, yeah, there's a lot of choices, and this is something that Hemlane and you brought to the table. You can really allocate what you want to do and what you want to outsource to technology, right? Is it leasing and all the apps? Well, maybe you use Hemlane. Is it, is it communication and tracking rent collection and repairs? Right? There's so many choices out there that you as a landlord can choose today. So it's very powerful.
Yeah, definitely. This was actually the most interesting and also the one where I saw the biggest opportunity to control this. When we asked about tenant turnover, so how often do your tenants turn over? I think, Michael, you and I both said long-term tenants, single family homes, we see them stay in there 4 to sometimes, up to 10 years plus. This was really interesting to me. Now, of course, these are survey respondents. Majority not using Hemlane. We try to get a mix between folks who use Hemlane and not. I found this to have the biggest opportunity. I want to hear your thoughts on it because they're saying that between 1 to 2 years is when tenants turn over. I was like, that seems really frequent, especially if you're in the 1 to 4 units, which means you have a smaller complex, single family or a duplex. The data was really, really interesting on this one.
Yeah, this scares me. If you own, call it 2 units, and you're averaging a turnover every 18 months, which is the difference there, you're probably not making a lot of money. Right? Turnover is what kills you. So I would try to dig into that going, what's going on? Is it rents too high? I mean, are you raising rents every year and that's scary? Are you being too aggressive? Is there service not there? Maybe you should have a property manager because you work so much you can't service your tenants. I don't know. My numbers, I haven't done this in a while, but my numbers from memory on houses was almost 8 years. Apartments, which side by side, top and bottom, right? So bird cages, if you will, was like 2.5 years. So, it'd be interesting to see. I would love this sliced and diced versus houses versus units. I'm going to guess there's a difference, but maybe not.
Yeah, no, I would have to also think that if it's a house, it's longer. But then I have a question for these folks of, this is the biggest opportunity for you to increase your cash flow. If you're talking about increasing your cash flow, here is where you can increase your cash flow. And
when you look at that, I'm sorry to interrupt, 1 year or less? Oh my gosh.
I know. And then this is just us taking the data of what folks have said. And this is, you can see exactly how we worded the question, so it shouldn't be confusing to anyone. But this would be the biggest opportunity if there are any landlords out there where you don't have tenants staying in your single family home for over 3 years. The question is, how do you tackle that sooner? How do you talk to the tenant 3 months before turnover and say, hey, would love to see if you're planning to renew, what could we do to improve? And try to keep them in there, assuming they're a good tenant, because majority are. Those that are good, you want to double down on that. And then if you're looking to increase, rents by 10% plus, that's probably not a good strategy, because you're right, the vacancy is going to kill you a lot more than the short term thinking about this.
I mean, I got to tell you, Dana, if my units were turning over this much, I'd lower rent. I want people
Yeah.
to stay.
Yeah.
Yeah, that's frightening.
Yeah, so that was a one where I think that was actually the most shocking to me, and also the one with the most opportunity. Um, the next one was, how much do you spend on property management as a percentage of your pre-tax income? So most owners spend less than 5% of their rental income on their property management fees. And
Wow, that's
and
shocking.
yeah, and so I guess the question there with it, or kind of how we can think about it, is, so I think majority are self-managing,
Yeah,
and they're,
I got to tell you just right now,
yeah,
I spend more than 5% on my portfolio, and I have a decent sized portfolio.
yeah,
Yeah,
yeah. And the ones who said nothing, I assume those are just 100% self.
self-manage. Yeah, have
And
to
then
be.
the
Yeah.
ones that say less than 5%, I have to think that maybe they're accounting for a leasing agent and something like that, or something else in there, or potentially putting that as their software.
Oh,
And then,
maybe. Yeah,
yeah.
maybe. Yeah.
And then the 8 to 10% or 8 to 12% is the next one, which makes
Mhm.
sense for
Yeah,
those
makes
who are
sense.
using a property manager. Yeah.
Mhm. Yeah, I totally agree. Yeah, more than 12%. Ouch.
Yeah, yeah. You'll see that is at nearly zero there.
Yeah, thank
Um,
goodness.
yeah, totally. The only reason I was thinking that someone would say over 12% is if they are using a full service property manager and then had a turnover with a leasing agent
Of
and had
course,
to
yeah.
pay for that, then maybe they're averaging that into there. I've never heard of a property manager, at least that I know of, doing over 12%.
Oh,
Unless,
it had to be a leasing thing, right? So you lose first month and half the deposit or whatever they charge it, that,
yeah.
if you add everything together, it can get over 12. Yeah.
The only other actually is these flat rates. There's these flat rate property
Mm,
managers that charge
sure.
like a flat $200 monthly rent. And if you think, if your rental's at 1,000, then
Yeah,
then you have
that's
to think it's more than 10%, it's 20%. So just something to
yeah,
keep in mind.
you're right.
And then this was, what were your average operating expenses as a percentage of your income over the past year? Expenses were
Hmm.
often less than 25% of rental income. So the expenses they had were less than 25% of their income. Does that sound right to you?
So this is just so everybody understands operating. So that's not mortgage payment. Is it taxes and insurance?
No, we were not counting taxes and
All right.
insurance.
So it's literally just day-to-day operations.
Day-to-day operations. Yeah.
Yeah, 25%. That would be that'd be, I mean, I think my houses are under that. My apartments might be right at that, maybe. Yeah,
Okay.
somewhere in there. Yeah, that makes sense. Okay.
Okay.
I like that. Oh my goodness, 50 to 74%? That's not good. I'm thinking that's a turnover or remodel or something. I don't know. That's
And
crazy.
sometimes with those, you kind of want to dig into them more, but you have to keep the question standard, right?
Yeah,
You want to
exactly.
dig into like
That's a
why.
landlord that needs help.
Yeah, exactly. And then we asked about property management software, and I think this is really interesting compared to what I think if you would put the survey out there 5 years ago, the
Oh,
answers would have been
vastly
a lot
different. Yeah.
different. But I think people are thinking now about software, whether it's just to advertise their rental, whether it's just to collect rent, but how are they using it and how important is it to them? Whether they're using a property manager who has a software or whether they themselves are. And, majority here are going through and saying, yes, it's very important for me to have some sort of software in place.
Yeah. This is definitely, software has made landlording easier. It's made it more less error prone, right? Audit trail, history, communication, tracking, just putting in system and procedures. When Olivia and I got started 20 some odd years ago, it was seemingly all on the fly, right? Back when faxes were a thing, and it's a world of difference. And I'm surprised that this isn't even higher. Very important and important. Yeah, it's
Yeah.
new landlords today. Get it. If you're not a landlord but want to be one, you've got to take the hem lane trial, which we'll talk about at the end. But yeah, yeah, good stuff.
Yeah. And then rent collection is the most common use of the software. So we
Makes
basically
sense.
asked, what are you using? Of course, you could check multiple boxes here, right? So you can see that it doesn't add up to 100. But most are using it for collecting rent and managing their repairs, was the majority of things that they were looking for. And I think the managing repairs and tenant communication one is one that you and I constantly talk about
Have to do it. Yes.
because of the audit trail of if a tenant
Correct.
comes to you and says there's, mold, and you're like, okay, there's organic growth. When did it come in? If they're trying to withhold rent or whatever it is, any of those, those situations don't happen often, but when they do happen, you definitely want to have a system in place.
Oh yeah. I mean, that's, as I've told everybody, that's the game changer. Technology providing an audit trail of communication. It's rent collection is nice, but we were collecting rent before. But managing repair requests and tenant communications is game changing.
Yeah. And then one other thing I would say with it is it's surprising that rent collection is not at 100%. Because I would say from that perspective, now there's some, right, where tenants still pay cash and stuff like that, but giving the option for your tenant to pay online. I mean, certain states like California, where we are, require one offline method of payment. You can't just say you're required to pay online. But having that, hey, it's automatically going to request the rent. It's going to make sure it's the right amount. It's going to set full payments only. It's going to make sure that it doesn't get disputed or anything like that if it's a bank-to-bank transaction. Having all of that in place, I think, is incredibly important. So something for 100% of landlords to think about.
Yeah, do me a favor, wrap this up, because we've this is online communications, bigger pockets. Tell me about this one. What is this?
Yeah, so this was about where do you get advice for your property management strategy? And
interesting. Bigger pockets is number one. That's
bigger pockets is number one on this. And of course, this just went randomly out. We have no affiliation with, we ourselves are not part of Bigger Pockets. But they're actually looking online at those communities there. And online communities could be one rental at a time as well. But this was basically asking, where are they getting advice? And it seems like some is family and friends, but a lot of it is online and moving towards the online space.
Yeah, Bigger Pockets has done an amazing job. I mean, I was on there back in 06, 07. It is the place where it attracts a lot of new investors. It's a little concerning that you're going there for actual property management advice. Because my history on that is not a lot of it's just, I think it's interesting. Right?
I think the thing you have to be concerned about is legal advice, right?
Because exactly.
People who are talking are not lawyers, and so you should not be taking advice.
Probably not even landlords. There are people giving landlord advice that aren't landlords. That drives me crazy.
Yeah, totally. And so that's pretty much the survey there. So hopefully that was insightful of, what we saw and opportunities there. I think the biggest takeaway is that turnover, and looking at that and saying, hey, how long are your tenants staying in the property, and making sure that you double down on that.
Yeah, I would tell folks as new landlords, getting an application like Himlane is game changing. It really cleans up communication. You'll never know how important it is until you need that audit trail. So I would say go to himlane.com, get the trial. Dana has done an amazing job, and our free course gives you a PDF how to do the full 30 days. And if you're in my course, how to get started one rental at a time, there's actually videos of Dana herself walking through the 30-day trial. Dana, thank you so much. You do. I will put the link in the show notes below. Thanks, Dana.
Thanks so much, Michael.
You got it.